having me on. Really appreciate it. Thanks everyone for joining us on a Saturday. I promise to try to make it well worth your while. My style is very simple. I like to keep my charts nice and clean. So I'm going to show you a system today that myself and the other traders here at Trading Winds have been using for about a decade now, very successfully. I've only got a handful of slides on my PowerPoint to share with you, and then I will bring up my live charting platform and we will spend the rest of the presentation on my slides. So a bit about us here at Trading Winds. Before I get into the presentation, we are a group of pro traders with well over 30 years of experience. We're real traders and real teachers, and we've been developing our own strategies and trading systems and teaching people around the globe from complete beginners to experts. Now, in today's presentation, I'm going to share with you the exact same money management rules that myself and the other traders here at Trading Winds use on a daily basis. I'm going to show you exactly what you're going to need to apply this system. And then I'm going to show you step by step the actual strategy. When we get to that point in the presentation, I'm going to ask you to throw out a symbol or two into your chat. And I'll bring up a chart. We can analyze it together and look back and see how this system would have worked on that particular market, okay? And then hopefully, time permitting, we'll answer as many questions as we can. A quick poll question or two here for you, just so I know who my audience is today and I can try to tailor my examples specifically. How many of you have seen me present at an event such as this or webinar before? Please let me know by typing a yes or a no into your chat. I really appreciate it. Thank you. I'm just going to take a sip of my coffee and we'll get into this. Okay. Also, can you tell me which market you prefer to trade most? Is it stocks, options, futures, or Forex? Please type it in. Wow, okay, a great mix. Thank you so much, everyone. A lot of option traders as well, which is okay. I promise I will share as many examples of each as I have time for. And one last question for you. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20? Or are you very active, 51 to 100 or 100 plus? Please, again, take a second and type that in. Wow, right off the bat, several 100 plus. Awesome. Okay, well, this system will keep you very active. I promise you that. And let's get right into this. Thanks so much, everyone, for participating. Please remember, trading can be very risky if you don't know what you're doing. So please educate yourself and do not trade with real money until you are completely comfortable. On that note, let me share our money management rules and show you how we try to limit our exposure in the markets on a daily basis. First and foremost, I know you've heard this a million times, but it is worth repeating. Do not trade with money you can't afford to lose. And what this is really all about is trading with an amount that is small enough that it feels completely insignificant to you. Trading is so much more important about how you manage a trade once you're in it than it is about selecting an entry. And when you're in that trade, you really do need to remain calm, be able to think clearly, and manage that trade appropriately. And if you're worried about the amount of money you have in that trade, you simply won't be able to do that. So really, this is all about trading with an amount small enough that it feels completely insignificant to you. You should also never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5%, even 2%. That way you'll still have a sizable trade on, but you will reduce your exposure considerably. And we believe you should never have more than 50% of your account balance active in the market at any one time. And this one usually gets quite a reaction from the group. But the reason for this is twofold. Number one, there are so many factors when it comes to the markets that are completely out of our control. And any major news announcement or a situation like 9/11 can really drive the markets against you in a hurry, okay, and cause you to take a sizable loss. So for that reason, if you only have half your account in there, your loss will be limited to begin with. But also, you will have money left there, another 50% of your account there, for you to put back in the markets and make back that loss. And with what I'm going to show you today, it really wouldn't take you very long at all. And lastly, you should spread your trades out. Pick the 1 or 2 best trades per time frame. Be very selective. We've seen for most of 2015 a lot more volatility in these markets than we saw in 2014. And there have been many days where the Dow has been up 300 points, but the very next day it pulls back 200 or 300. So if on a strong update you jump in and you place 5, 6, 8 trades, and the very next day the market retraces on you, you're going to find yourself in a huge hole right off the bat. And that's exactly what you don't want to do. So be selective, take the 1 or 2 best trades per time frame, and spread your trades out. Okay, a couple more sayings we have here that we live by. And if you're just starting out, I really want you to write these down and walk away with these. Number 1 is, you will never go broke taking profits. As you get more and more experienced in these markets, and as Fausto said, we never stop learning. And as you gain more and more experience, you will learn how to stay in the trade a little longer each time and squeeze out every bit of profit you can. But especially when you're starting, get used to banking those profits. And always remember to check your ego at the door before you start trading. This is never about whether you're right or wrong. That's important. But it is all about how much money you make when you're right versus how much money you lose when you're wrong. Okay? Now, what will you need to trade this system? Just about any charting platform will do. We are going to have 3 indicators on our chart. First, the 20-period simple moving average. Okay? Then a very stripped down version of the Ichimoku Kinkin-Hoi indicator. Okay? This indicator has been extremely popular over in Asia for many years, and a lot more popular here in North America recently. And it's actually used as a strategy in itself, but we use only a portion of it, and I'll explain how. And then the relative strength index, the RSI indicator. We do not use the default settings, but I will in a moment give you the exact setting we use and show you exactly how we use this, okay? So there's really no need for you to go out and spend money on new hardware or complicated software. Most charting packages have these 3 indicators, so you already have everything you need. Okay, a few benefits of this system. Number 1, it will work on any market. Stock options, futures, Forex. I will show you several examples. Globally, any time frame, any price level. We've traded this with $3, $4 stocks. We've traded with the Amazons, Pricelines, Googles of the world. Also, you won't need a lot of experience to do this. You'll show in just the brief hour we have together today, I'm going to show you exactly how to do this. You'll be able to walk away and use this yourself. It has very clear entry and exit points, okay? Extremely low risk, I'll explain, and most importantly, it is consistently profitable. As I've said, we've traded this over the past decade through all different types of market environments, and it has been extremely consistent for us, okay? So the strategy, again, is comprised of 3 main components: the 20-period simple moving average, and we have tested this and traded with exponential weighted averages, different periods, but we found the 20-period simple moving average works best. Again, a very stripped down version of the Ichimoku Kinkin-Hoi, and a specific setting on the RSI indicator. Okay, so let me bring up my live chart now and walk you through this setup. You should be able to see my thinkorswim platform and a chart of Skyworks, SWKS here. Let me explain. On this chart I have in blue, this blue line, that's the 20-period simple moving average. This yellow shaded area, yellow and red here, these are the clouds. This is the stripped down version of the Ichimoku Kinkin-Hoi cloud. Now for those of you who aren't familiar, let me go into the settings and show you that first of all, we do use the default settings on the Ichimoku, the 9 and 26 periods, okay? Those are the defaults. The only difference is we uncheck here the Tenkan line, the Kijin line, and the Chiku line. Okay, now I'm going to plot them back in just to show you how this would look with the full indicator and explain why we choose to remove these lines. Okay? So this is the full indicator. Now it makes the chart a lot messier, Now, there is absolutely a method to this madness. This indicator can actually pinpoint entries for you. It can allow you to see areas of support and resistance, etc. There is a method to this, but all we use it for is trend. And we find that having all these additional lines on there just really makes the chart a lot more difficult to read, and that's why we remove that. The cloud portion here is all we use, and I'll explain in a second exactly how, okay? And down here is the RSI in red. Now the RSI is typically used to identify overbought and oversold conditions. So what you'll normally see is a setting of 14, which is usually the default on most charting platforms. And then you'll see a line at the 80 and 20 levels, or the 70-30, to identify areas of overbought and oversold conditions. We use it slightly differently. We're going to use the RSI to pinpoint our entries. But first of all, we want a much more responsive RSI. So we're going to cut the length in half from 14 to 7. Okay? We're going to use a setting of 7. And we're going to remove the lines at the 80 and 20 level and plot one line right down the middle at the 50 level. Okay? So it's an RSI of 7 with a line right down the middle at the 50 level. So what we are going to be looking for are two things when we first pull up a chart. Okay? Two things we must have in all the systems we use are trend and momentum. So how do we quickly and easily identify trend? That's where the cloud portion comes in. When the candles and the moving average are above the cloud, we are in an uptrend. When they are both below the cloud, we are in a downtrend. And if they are overlapping, if one or both are overlapping the cloud, then we are in what we would call a consolidating market, and we prefer not to trade during that time period. Okay? So in a split second, when you bring up a chart, you can tell whether the candles and the moving average, where they are exactly, and can tell whether we are in an uptrend, a downtrend, or a sideways market. The second thing we want to identify is momentum, and the way we do that is by the slope in the candles. Okay? But this is where the 20-period moving average comes in. We use the 20-period moving average to identify that slope. Okay? And, you know, when it comes to momentum, you can have slight momentum in your favor, you can have slightly greater momentum, or you can have very significant momentum in your favor. In other words, the more significant that slope, the better. It works exactly the same to the downside. Okay? You can have slight momentum, more momentum, or very significant momentum. And the more significant that slope, the better it is. And another reason why we use that 20-period moving average is because during times of a pullback, okay, or a retracement, we could easily mistaken that downward slope in the candles as downward momentum. But if we see that the 20-period moving average has maintained its slope higher here, then we know that this is nothing more than just a retracement or a temporary pullback before the continuation of the trend. Okay, that's why it is such a handy tool for us. So once we have both trend and momentum, I'll review it one more time. Trend, we need the candles and the moving average to be on one side of the cloud. In this case, above the cloud, so we're in an uptrend. We can quickly spot the slope on the 20. So we have momentum. Once we have those two conditions in place, all we do is move our attention over to the RSI and wait, in the case of a long trade, for the RSI to move from above back to the 50 line or below, and then cross back above. Okay, and it does have to come back and at least touch that 50 line. All right, or go just below it. If it stops short of that 50, it's not enough. All right, so in this case, it comes back right to the 50 and turns higher. Once it turns higher, okay, identify that bar where it turns higher, which in this case was this bar, okay, and that would be your setup bar. Okay? Now there's a difference between the setup and the trigger. This is a valid setup. When you have trend and momentum in your favor, the RSIs come back to the 50 and turn back above, that is a valid setup. Now your trigger would be a trade just above the high of that same candle. Okay, one tick is enough. Okay? It doesn't have to close above there, it just has to trade above the high. And you go long, and if you go long, your stop goes just below the most recent low. Okay, now there's one crucial rule here that you need to understand and remember, because this one rule can save you from most losses that you would otherwise take with the system. If the stock, after the setup bar, trades below the low first, before it ever trades above the high, the trade would be disqualified or negated. Okay, so please remember that it needs to trade above first. If it trades below the low first, it's disqualified. That one rule will prevent you from those losses that would otherwise happen. So in other words, most trades that wouldn't work out with the system are not even losing trades, they're just disqualified trades. Okay, the other thing you'll notice as I go through my examples is that typically when it does trigger, it tends to move in our favor immediately. Okay, and that's huge for a couple of reasons. One, remember, when you get in a trade, you need to be able to remain calm and think clearly and manage that trade. If it moves in your favor immediately, you're already in profit. It'll automatically help you do that. And for all of you trade options, which is the majority of you when I asked that poll question, you know how important it is to have that option trade move in your favor right away. When you open an option trade, if it goes against you, that loss in premium, okay, that initial loss in premium is going to require a much greater move back to the upside for you to make back that loss and then put you in profit. So if you're in profit right away, it's huge. The other thing is there are times where you do get a proper setup, such as this one here. See here? Let me highlight that. So again, here, the momentum had started to flatten out a little. We still had a bit of momentum, but if you felt this was too flat for you, then you wouldn't take that trade, okay? But we still have trend and momentum in our favor. I'll zoom in for you here. Okay, there we go. All right, and you can see the RSI, again, dipped below and above. Now, it doesn't matter how far it dips below. What matters is that at the time of the setup, the 20-period moving average has not gone flat. It still has a slope. Okay, now that I've zoomed in, we've lost most of that slope. But just so you understand, once it moves back above, that's your setup bar. Now, from time to time, you're going to see it do another dip, what we call a double dip. Turn back again. Sometimes it doesn't even break above the high, it won't trigger, but it dips again and then triggers. Okay. Other times it will trigger you in and then move back and trigger again. All right. Now, this is what we call a double dip. Okay. These typically tend to be some of your most powerful setups. Right. So this is actually a good thing when you see this. All right. And now, once you are in a trade, you no longer have to worry about the RSI. You don't have to look at it at all, unless you are more of an aggressive trader. Okay. In that case, with every subsequent dip, when you get another setup, if you're more of an aggressive trader, you can actually add to your position at every new dip here, okay, along the way. And I'll zoom in, because typically when you do get a sustained move in one direction or another, you do get multiple opportunities to enter. So if you're more aggressive, you can add to your position as you go. If you're more conservative like I am, you can just read every additional dip as further confirmation that you're in the right trade and that you should remain in that trade. Okay? Let's look at an example to the short side. So same thing, same rules apply. You're looking for two things immediately: trend and momentum. If the bars and the moving average are below the cloud, you're in a downtrend. Second thing we want to know, do we have a slope, a significant slope on that 20? Yes, we do. So now we have momentum in our favor as well. We switch our attention to the RSI. We wait for a move either back to the 50 or just above it, and then back below. And once we trade back below, we identify that as the setup bar. we wait for a trade below the low of that bar to get us in. And once we get that trade, we go short, and the stop goes just above the most recent high, and off it goes. Okay? And you can see, again, how nice these work out. I'll show you several examples. But what this is doing is selecting the easy trades for you. It's actually making trading easy for you, because when you're trading with trend and momentum in your favor, half the battle is already won. Okay? So what you're doing is picking out the high percentage plays. And you'll see that over and over here, there were several dips, several opportunities to get in. Here, there were several dips, several opportunities to get in. Here. Okay? Now, if your entry, okay, if your entry, here's a setup bar, and you're waiting for a trade below the low. If your entry is on a gap, then you want to reassess your risk there, meaning you want to identify where your stop is, which would be, in this case, just above the most recent high. Okay? It would actually be here. Okay? But your entry would be way down here. So now your risk is no longer from the low of the setup bar to your stop. It's now from the open of the gap bar to your stop. So if that's too much for you, again, remember, let it go. There'll be plenty of other opportunities. The other thing you want to make a note of with this system is that when you get a move from one side of the cloud to the other with momentum, in other words, with that slope, that's a heads up that this move in the new direction is going to last for a while. Okay? So right here now on FCX, we're seeing that again. We've now moved from below the cloud to above with both the bars and the moving average, and we've done so with momentum. This tells us that this move should last for a while. So now all you're doing is adding this to a watch list, and you're waiting for those pullbacks, okay, and for that RSI to pull back and then back above, and that's where your entry will be. And once that happens, as long as the 20 is still sloping higher, then you have a valid setup, okay? It's as simple as that. Let's look at a few more examples. Here's a chart of TLT, which is the ETF for the 20-year Treasury. Again, very simple and easy to spot. You can see right now, quickly, the bars are below the cloud, but the moving average is not. That means we do not have both criteria that we need. We do not have trend and momentum. So we do nothing. We skip it, move on to the next chart. But if you can see here, once we had moved above the cloud with both, we move our attention to the RSI, and here's one of those double dips. It doesn't have to be a perfect looking W formation, okay? But this double dip tends to be very powerful, and you can see that right up here, boom, it just exploded. Right? That's exactly what you want to see. Here's a chart of GMCR, and here's that significant slope from one side of the cloud to the other. We knew at this point we were in for a sustained move lower on GMCR. Okay? So now all we're doing is moving our attention to the RSI and waiting for these moves back above and then back below here. Okay? So this one area here was an opportunity. This area here was an opportunity. This area here was an opportunity. Okay, and you can see, if you can see my crosshairs, that this is where the trades were, right in here. Okay, and if you had taken any one of these, okay, you would have done very well here. Okay, this is one we took recently. A trade we announced for our members was right in here, okay, right in this area. Okay, and we took our profits down here. So it's, again, putting the odds in your favor by trading with trend and momentum. And the beautiful thing is that once you can identify a stock that is trending strongly, you know there's going to be multiple opportunities. So all you're doing is adding that stock to the watch list and then going back and keeping an eye on the RSI. And whenever you get those dips, okay, whenever you get those dips below and back above, those are your entries. Okay? And you can go through as many charts as you like. All right, you're going to find this over and over again. Here's another one of those double dips, which work out beautifully. All right, so let me go through a few other markets. Many of you said you like to trade futures. Nothing changes. The rules remain the same. The settings remain the same. Here's a chart of crude oil futures, and you know, I'm sure all of you are aware of just how badly this got beaten up in 2014. Now, none of us at the time knew how bad this was going to be, but we did with this system have a heads up that this was going to be in for a sustained move lower. We just didn't imagine it would be this big. But having said that, once we knew we were through that cloud, with momentum, revert our attention to the RSI, and all these opportunities in here, one after the other, are valid setups, all of which would have been winning trades. And actually, with the exit strategy that I'll touch on a bit later, we would have been in this trade right up until this area here, okay? Right down here. So, again, it's a very, very consistent system. Here's a chart of the Euro futures. Again, it's the same thing. Once you're in a sustained trend, okay, these areas here that are trading sideways, just ignore it. Be patient. Keep it on your watch list. Wait for the 20 period to start sloping lower again. And once it does, and you get these moves by the RSI back to the 50 and back below, boom. There's your entry, and there's the move. It pulls back again, another entry. Okay. There's a double dip, and off it goes. Here's another one right in here. Okay. Look at the move after that. Boom, right there. The stronger they're trending, the easier trading becomes. If the moving average flattens out like it did here, don't take the trade. Don't worry whether or not this worked out. Yeah, it worked out great. Who cares? Doesn't matter. Not all trades are going to be winners. Don't get me wrong. Not all trades are going to be winners. But if you follow that one rule that I gave you about waiting for that trade just below the low for a short trade, okay, or just above the high for a long trade, that'll save you from most losses. Because if you get it to trade in the opposite direction first, if it trades above the high first, then disqualify it and move on. Okay, obviously the momentum in your favor isn't strong enough at that point. Let me give you a couple of Forex examples, and then we'll take some questions. Here's a chart of the Euro-Canadian dollar pair. Nothing changes. Again, everything remains the same. It's simple. You can quickly and easily spot whether you're in a downtrend, an uptrend, or a consolidating market. In this case, it was a downtrend. We had momentum on our side. Wait for the RSI to cross above, back below, and boom, right there. There's your trade. Okay? This one here, when it pulled back, we lost momentum. So you do nothing. You regain momentum, you're in for another shot lower. That's simple. Here's a chart of the British pound, US dollar. Again, you want these trending stocks. There's that move from one side of the cloud to the other with momentum. So we knew we were going to get multiple opportunities here. Put it on your watch list, and all you're doing is entering right up in here. Okay? Here's a double dip, and for the double dip to the downside, it looks more like the letter M rather than W, okay? But regardless, they're very, very effective, okay? So this would be a great time for you to throw in a symbol to your chat, ask a question or two. I'm going to actually bring in our coaching coordinator, Raul. He's going to help me read off the symbols and the questions so that I can focus on my chart and we can get through as many as possible with the time we have left. Raul?
Vince, thanks so much for letting me be a part of this.
Sure.
Awesome presentation as always. Got a lot of symbols to talk about today.
Absolutely.
Let's start with Ed. He wants to know about Home Depot.
Home Depot. Let's look at Home Depot. So Home Depot was performing really well for the bulk of the past year, and you can see here that it kind of took its time getting over this cloud. But once it gained momentum, right, and then started giving us these pullbacks, these were the opportunities. And if you look along here, right along this stretch, it was about from late October or early November of last year, okay, all the way until March of this year, there were several opportunities here, all of which were winning trades. One here, one there, okay? And see, we like to limit our risk as much as possible. In one of our other systems, we limit our risk to the range of the 1 bar. In this case, we don't. We put it in below the most recent low, only to give us a little room for the potential that those double dips, because they can be so powerful. Here is another one here, okay? And this is from here, you can see the move, just how well. Now, Home Depot currently is within the cloud here. So nothing to do yet on Home Depot but wait.
I've got a perfect name for this beautiful Saturday morning.
Okay.
Gardenia.
Wow.
Gardenia wants to know about price
Nice
line.
name.
Now, we've got a lot of people asking whether this works on shorter time frames. So maybe you can show price line on a 1 hour.
Price line, sure. Okay. First of all, on the daily, since I'm already here, you can see that once we got through this cloud here with momentum, and that's strong momentum. We knew we were in for some downside here. And all we do is wait for that move back to the 50 and below on the RSI, okay? Right here. This red bar here was the setup bar, okay? Triggers the next day, and look what happens, okay? Boom. And, you know, this is a lot more significant than it looks because of the price of this stock. You would have entered around 1180, and this went as low as 1019. So that's quite the move. Now, no one's saying you're going to get the absolute low, absolutely not. But you will get the bulk of that move. You can get in the middle 60%, which we always shoot for, is a great trade. Now, price line right now, back above with momentum. All we have to do is wait for the RSI to dip below and back above. Okay, but let's look at it on a 1 hour chart here and see. Look at this area back in here on the 1 hour, okay? Look how many opportunities there were. Look at that slope on the 20. When you have momentum that strong in your favor, okay, the odds are greatly in your favor of a winning trade. And you can see that there was an opportunity in here. Sorry, let me highlight that. There was one in here, okay, which was up in this area. Boom, there it goes. There's one in here again. And if you're a more aggressive trader and you're adding to these as you go, you know, it's even greater. But again, I'm a very, very conservative trader, and I love using this system. So it absolutely does work on all time frames.
Most popular symbol today, guess what it is?
Apple.
Apple, as always.
It always is.
Daryl, Sebastian, and Donna will all want to know about Apple.
Sure, let's look at Apple. Well, I'm already on the hourly, and you can see when it's trending on the hourly how you get several setups. Let's go. Did they want daily? Is that what they wanted?
I haven't said, so I'm assuming.
Okay, so here on the daily, same thing. Right now, the moving average and the bar on Friday did close above the cloud. It just doesn't have very strong momentum. I mean, here, see, this is another thing you can do. You see how the RSI has crossed back above here? Okay, so one thing we would do here is, because we have limited momentum, we would assess our risk. In other words, we look at our entry, which would be one tick above Friday's high here, okay? And look at the most recent low, which was the low of Thursday's candle, okay? Look at that range and decide, are we comfortable with that? Okay, and again, if you're trading this with options, you can limit this risk even more. You can really leverage the system with options. It's fantastic. But if you're okay with that, then even the limited risk is okay. You can take that trade because the bulk of them will work out. But if you want the higher percentage plays, then you want a greater slope in that moving average, like we had back here. And again, several opportunities back here, all of which worked out really, really well. So it absolutely works well on Apple.
There are a lot of questions from folks regarding, will this work on smaller time frames? Can I use this for day trading? We will get to those questions
Sure.
and answer hopefully each and every one. But Norman was asking about the British pound, Japanese yen.
Okay, let's look at British pound, JPY. So sometimes you will get a runaway move, a move that is so strong that there really aren't any pullbacks, or at least not in the RSI, okay? Or you'll get a move that pulls back way too far and the moving average flattens out. So be it, it's gonna happen. What you want to do is be patient and wait for the proper setups. Have all those conditions in place. That's where you're going to get these moves. Okay, you're going to pick out the nice, easy, safe trades. All right, with these. So yeah, it works on currencies, futures, stocks. It really doesn't matter. Anything you can plot a chart on.
Russell 2000 futures.
The TF. Let's look at the TF. So, and you know what you're going to find here sometimes are these very kind of choppy back and forth charts. But what you got to understand is trading is a lot more difficult when you're trading in choppy markets like this. That you're likely to be getting stopped out. It's so much greater. That's why we're only interested in taking trades when we have that slope in the moving average. Okay, because that's when the odds are in our favor. And you can see again, there were trades in this stretch, several opportunities to get in, one there, one here, okay, all of which would have worked out. This last one had a limited move before the rollover, so that one might have resulted in a stop. But again, the majority do well. Right now, the Russell futures are within the cloud. Nothing to do but wait, okay, and let this give you a signal one way or the other.
Bruce is asking about Costco.
Costco, sure.
Are you going to Costco today with the family?
No, that's unfortunately the trip tomorrow.
Okay. Well, there you're going to have free lunch, right, with all the sampling and everything that they have?
That's right. No, Costco, again, down in here, not a huge slope, but certainly did have momentum and trend in our favor. And throughout this whole stretch here, you could have gotten in at any time from here. And you can see what resulted after that. So right now, the moving average is almost through that cloud. And the key here, the key is the slope. Okay, if it can continue through and end up on the other end with that slope, then Costco will more than likely be in for some pain to the downside. All right, a sustained move. And it's so if it does get through, put this on your watch list and then keep an eye on that 7-period RSI. That'll give you several setups in the near future to the downside. Okay?
We'll do one more and then let you get back to your presentation.
Sure.
Neil was asking about Ford.
Ford? Sure. So Ford, you can see right now, again, quickly, in a split second, you can tell there is no trend, there is no momentum. Everything is within the cloud, so we skip it. We don't look at it right now. But looking back, you can see in this stretch when we did have it, we don't look at it right now. But looking back, you can see in this stretch when we did have that trend and momentum in our favor. Look at this, we had a nice double dip down here. I'll highlight it for you again, right down here, okay, in this area. And what resulted? Well, boom, a nice move. All right. So that's exactly what you want to see. Sometimes you get these runaways. You don't get an opportunity. No worries. Just be patient. So we've got to give Ford a bit more time. Right. All right. Let me just go back to my presentation here. I just want to recap what I've shown you today. So I've shown you a system that will work on any market. All right. Stock, options, futures, Forex. I've shown you several examples, any time frame, any price level. You saw just how easy it is to spot the setup on the chart. That's why we like to keep our charts nice and clean. This is absolutely strong enough to use as is, as a standalone system, but it can be a great complement to whatever you're using right now. As you've seen, most of the markets that trigger tend to move in your favor immediately. And more importantly, with that one rule, the majority of trades that don't work out are not even losers. They're just negated trades, okay? Now, I do see where there's a ton of questions. I promise I'll try to answer as many as I can. But before that, let me tell you about a pro class we have coming up on our winning momentum strategy. The class is set for Friday, May 29th, 1 p.m. to 3 p.m. Eastern. I'll be teaching this class myself. If that date doesn't work for you, it will also be recorded. But during this class, I'm going to be showing you the complete system from entry to exit. I'm actually going to share with you 5 different exit strategies that you can use with this, but focus on the one that myself and the other traders here at Trading Winds use on a daily basis. I'm also going to show you a very unique way of adding support and resistance that can really increase the accuracy of this. And really, you know, this system is very accurate on its own, but where this really comes in handy is when you have several setups on any one night and you want to select the 1 or 2 best of the best. This will really help you differentiate between the average trades and the really high probability trade setups. Same with the 2 Fibonacci tools I'm going to show you. I'm going to teach you one that will help you confirm your entries and one that will help you set targets for your exits. I'm also going to show you how we here at Trading Winds use or trade this with options. Okay, I'm going to tell you exactly what kind of expiration you should be looking for, what kind of delta, when you might want to buy a call or put versus selling a credit spread. We'll cover all of that. And one of the most popular parts of this class is near the end, we will do a full search for trades setting up that coming week so we can all walk away from that class with trades to put on right away. Okay, so and as an extra bonus, I'm gonna throw in and teach you what we normally teach in a whole separate course about the Ichimoku Kinkin Hoi indicator. I'll show you how you can use that indicator alone as a strategy in itself. So this is really like having 2 courses in one. The link for this class is tradingwinds.com/move, M-O-V-E. But before you buy, let me tell you exactly what you're going to get so you know that it's right for you. As soon as you place your order, as soon as your order is processed, which usually takes about 30 minutes or so, you're actually going to get a link to an on-demand recording of the previous pro class we did, which was just a couple of weeks ago. That way, you don't even have to wait till the end of May for the class. You can watch this and start trading with this right away. Regardless of that recording, we will save you a seat at the pro class, which is, again, it's really 2 classes in one. And we're also going to throw in a 30-day membership to our pro service. And let me tell you a bit about that. Our pro service is the most powerful way to get access to all our systems. This isn't the only system we trade with. And you're going to receive real-time trade alerts showing the entries, the stops, profit targets, all of that for all our systems. You're also going to get the premium nightly videos, which we send out from Sunday to Thursday, that will show you exactly how we trade that. And you'll get access to a members-only weekly chat. Now, the next one happens this coming Thursday. They happen every Thursday morning from 10 to 11 a.m., and they are recorded if you can't make that time. But you get to come into our room and ask me any trading-related question you like. We've had some fantastic sessions. In addition to that, you also can access a library of all our past educational sessions. And as a pro member, you can reattend any pro class you've taken in the past as many times you like for free. Okay, so altogether, this is a $988 value, but for anyone on here today, all we're asking for is just $97. We're practically giving it away, but we really want you to see what we're doing here at Trading Winds. Again, the link is tradingwinds.com/move, M-O-V-E. Now, we do have to limit this class to just 25 people. Reason being is the goal for that class is to answer all your questions and make sure that when you walk away from that class, you're able to completely trade this on your own, right? And we always get people from different backgrounds, different levels of experience, with some great questions that lead to different technical analysis topics. So there's so much material for us to answer all those questions. We really do have to limit the number of people. But again, May 29th, 1 p.m., this is everything you will receive. And if there's time for a few more questions, by all means.
Got 9 minutes.
Okay.
I've got questions probably for quite a bit longer than that.
Okay.
You ready?
Yeah.
Okay, Srinivas was saying, how do you define a good slope?
If you want a really, really powerful slope, you can use, I typically like the ones that are at least at a 45-degree angle. That's what I consider a very, very strong slope. But again, with the other components that I'll be teaching you in the class, like the support and resistance here and the Fibonacci's, those as well, in addition to the slope, are going to help you identify the super strong setups.
Stephen was asking, a stop is at the setup or the trigger high?
No, well, okay, so for a short trade, it's just above the most recent high where your stop would go. For a long trade, it's your most recent low. So it's not necessarily the setup bar you're looking at. It's the most recent low.
RSI setting is
7 and a line drawn at the 50 level. Okay.
Do the cloud colors matter, or only the relationship between the cloud and the moving average?
Yeah, no, it's only the relationship. The colors do not matter. They do matter if you're using the Ichimoku Kenken Hoi indicator as a strategy in itself, which I will teach you how to do that in the class. But for the purposes of this system, the cloud color does not matter.
Mort saying, can you use this on any time frame? We've discussed that.
Yeah, yes, absolutely.
Sure. Easy to use. You've got a lot of clients that are day traders.
Yeah, simple use. We have people using this with the E-mini futures on a 5-minute consistently.
Tradingwins.com/move. Ask you a silly question.
Sure.
You call move, but dove is dove. How come they don't call it do or mug?
For those of you joining us the first time, Raul always tries to be funny at the end of these presentations. Sometimes it works out better than others.
Our friends in England would probably correct us on that. By the way, did you hear what? There's a new princess in the royal family?
Oh yes, she had the baby this morning. I think, right?
Yeah. Yeah. I got all the updates on Facebook.
There you go. See, you didn't just come here for a trading education. You get the latest news as well
on the royal family.
Yeah,
absolutely. Could you repeat the cloud settings? That's from Mithun.
So the cloud settings are the default settings, the 9 and 26. But what we do is remove the 3 additional lines, the Tenkan, the Kijun, and the Chiku lines. We just unplot those from our chart. We just leave the cloud portion.
What happens to the 30-day subscription for the folks that are getting complimentary?
So for the complimentary 30-day subscription, at the end of the 30 days, if you're enjoying it, you don't need to do anything. It'll automatically renew at $97 a month. But if you'd rather not continue for whatever reason, just give us a call and we'll put a stop to that. We always like to say we have the world's easiest cancellation policy.
Bill's got a long question. I'm going to read it as it is. He's saying, is there a period between RSI dips below 50 that's needed to qualify as a strong move?
No, the amount of pullback doesn't matter. What matters is that when it does cross back above that 50 line and you can identify your setup bar, what matters is that the slope in the 20-period moving average is still intact at that point. If that slope had flattened out, then you don't want to take that trade. But if your slope on the 20 is still intact, then you're good to go.
Eric was asking, what exactly does a double dip represent?
It's just like a pause, another small pullback before the stock moves higher. But again, what we found is that after double dips, those tend to be some of the strongest moves.
What time period have you found to be the most effective for
when I trade intraday, I personally prefer the 15-minute and the 1 hour. But otherwise, I mostly trade on the daily myself. Having said that, for those of you who might be managing a retirement account, the weekly charts, or even for those of you that don't have a lot of time to devote this, might have a full-time job and a family, and only have a couple hours on the weekend to view some charts, the weekly charts with this give you some phenomenal setups.
David's saying, I've taken the favorite trade setup class in the past. Is it a portion of this class?
Well, both systems are based on trend and momentum, absolutely, as are most of our strategies. But otherwise, they are completely different strategies.
Mavis is saying, I would love to sign up for the class, but we'll be traveling that day. Is there an alternate date?
That's okay. I mean, like I said, once you purchase one of our classes, you can take repeats anytime or as many times you like for free. But as soon as you sign up, you're going to get a recording of the previous class we did. So even if you're traveling soon, you can take that recording with you. It's an on-demand recording. You have it for life. You can access it anytime you want from anywhere. And so you can certainly see the class.
Now, you'll show people how to set up their charts just the way you
Yeah,
have them,
absolutely.
exactly the way you have them?
With the class, we have a lot more time. We're going to go step by step. I'll show you everything that you need.
In the class itself, you'll do a scan at the end. Now, what do you do for your scan? Is it...
I'm still a little old school that way. I prefer to go chart by chart only because that's a method I use to build my watch list. In other words, when I come across a chart that is just moving from one side of the cloud to the other with momentum, then I like to add that to a separate watch list. So I prefer